All right, guys, hope you had a great weekend. Diving right into a very busy week. Don't forget, first and foremost, Wednesday we have FOMC, so that should be interesting. 2 o'clock Eastern time. Keep an eye on that. That should be a market mover, as it has been the past few months. Last week was pretty interesting, obviously, with that big dip on Monday, followed by a rally back up, filling the gap on SPY. Just a quick glance at that. So we gapped down last week on Monday from a close of 431 on previous Friday down to a low of 421.97, recovered back up. And in the 4 days after that, we hit a new all-time high. Very interesting to see. A lot of strength in the big names. Apple, Microsoft, Google, Amazon, Facebook come to mind. And we're going to cover those now, right? So earnings week is in full swing. This is the busiest week of the season, starting off with Tesla reporting tomorrow after the bell. So Tesla has been not doing too much the last few months. They've been in this kind of wedge, if you will, right? It's a wedge pattern over here, right? At some point, it should break out of it. And when it does, it'll either burst up or burst down. I'm not sure which direction. I'm not trading it myself. I'm not a fan of Tesla at the current valuation. I think it's overvalued. That being said, looking at the option chain for the week ahead, the expected move on Tesla right now is roughly $50 in one direction from the current price. So upside is about $6.95, downside is around $5.95, right? So expect to move up or down by about $50. If you factor in the potential move, you're basically looking at a move additional of about $11 in one direction in addition to that. So up to around 705, down to around 585 or so, right? So if you're trading Tesla, obviously be cautious. IV is much, much higher than the historical, as you can see over here, 50%, historical is 35%, right? Trade cautiously. Might be better to wait till after the event itself, hope for a flat outcome on Tuesday, and then trade upside or downside based on that event itself, right? My preference for trading earnings is to wait till after the earning event. IV comes down, you've got all the data in hand, and if it's flat or it goes down on a good report or up on a bad report, you can always take the opposite view at a much, much cheaper cost, thus a much, much lower risk, which gives you a better asymmetry of risk, right? Remember, going into earnings, it's pretty binary. If you're buying options that expire the same week or even a few weeks out, they can become worthless quite fast. So unless you're okay with losing money overnight, it's probably better not to trade those earnings, right? If you're holding a few months out, like let's say September, October, for example, not too bad, right? That's Tesla. Next thing we're going to go over now is, I believe it's AMD. Let me just check my list right now in a sec. So, yeah, we're going to go over UPS, right? So UPS is next. There we go. Again, UPS had a pretty strong quarter last quarter. They popped up from 175, hit a high of 1959. Since then, they've been consolidating for the past few weeks or so. We'll see what happens with UPS's earnings. Again, the option chain isn't as liquid as other chains, but looking at the expected move this week on UPS, IV is very high, 28%, HV is 19%. Right now, the expected move for this coming Friday is roughly upside of 222, downside of 198 or so, right? So keep an eye on UPS. They report on, I think it's Tuesday morning. Before market open, right? So if you are going to play it, you need to play it by tomorrow night before close, right? But again, I don't advocate trading earnings. I prefer to play them after the event has already transpired, right? Option chain, not very liquid overall. There's not a lot of volume, not a lot of open interest for this coming week. So spreads might be a bit wider than usual in some strike prices. I would probably, again, wait till after the event and then trade it, right? It does have nice follow through usually after earnings. So if it does pop up or drop down, typically it'll keep moving up or keep dropping down after the event, right? So keep an eye on that Tuesday morning after close, right? Next name we're looking at, one of my favorites and one of my larger positions, is AMD, right? So AMD, pulling up the chart here, has been consolidating for the better part of a year right now, right? You can see this is a 1-year chart. It gapped up last July, right around this current time frame, up from a low price of around 60-ish to a high in just a few weeks of 87 or so. And looking at this chart right here, I see that we bounced off the 85 support area on Monday. Keep in mind, Monday was a big red day in the market. AMD was actually green. That's a nice indicator that it's diverging from market sentiment right now. And as such, if we can push tomorrow and Monday, tomorrow and Tuesday, which is when they report after hours, toward around 95-ish, there's a very good chance that on a good report, they push above 100, probably to 100 or 105, possibly even 110 by end of the week, right? Now, obviously, I've been bullish on this for a while now, but I do think we're nearing the area of a breakout because it's been consolidating for a whole year now. Now, this chart reminds me a lot. I'll show you their 2-year chart, and then I'll show you a second chart, right? So again, consolidation heavily in this range over here. This is the last year for a few months before a nice big breakout, new all-time highs, right? Never once have we seen it go back below the support area, right? And now we've consolidated in this range, and it's probable now that we break above again, gap up, push much, much higher in the neighborhood of 10-20% higher pretty fast in the next 2-3 weeks, right? And this reminds me a lot of Snapchat's chart, which had a big breakout last week, right? So similar consolidation they had over the past few months. They're consolidating since basically December of last year, so for about 7 months. And what happened? They smashed earnings and they popped far above previous all-time highs, right? And again, similar chart prior to this as well, consolidation before a big gap up, never pulled back down below that. So I think we're going to see AMD do a similar move to Snapchat. Obviously, I'm very bullish. That being said, I could be wrong. So if you aren't already in it, remember that the IV is very high right now still, and you want to be cautious in looking at buying options that expire in the short term, right? So looking at this coming week, the expected move on AMD is roughly $6 in one direction. So upside of around 98, downside of around 86. But that being said, I do think that if they have a good report, they'll pop far above the expected move to around 105 or so, establishing a new all-time high, right? If you are going to trade it, you're going to want to use spreads, obviously, because the IV is very high. I would not trade weeklies. They are too short-term, very risky, very binary, right? Go out at least, I would say, to September, if not already in. I'm in August myself, August 20th. I've been holding for a while now, but my position is a roll-up position, so it's already pretty much paid for. My break-even is 91.40, so if it pulls back down, I'm not being hurt that much, right? But be cautious, obviously, and again, if it's flat after the ER, because the past 3 earning reports, they've beat and they've actually fallen each and every time. So if it happens again where they beat and they fall again, it'll provide a nice opportunity for those that missed the previous entries on a decent entry, somewhere around maybe 85 or 80 probably, but I don't think we're going to see it go down to 80 again, perhaps 85. But again, I'm very bullish on AMD. I think they're doing very well. Last week, Intel reported their server side business was much, much slower than expected as well. And all signs point to AMD taking their lunch right now, right? So keep an eye on AMD. My upside target's 105 to 110 in the next couple of weeks, possibly by this Friday. But again, don't hold your breath for that, because as the option chain indicates that this Friday, not many people are betting on it going above 100 by Friday, right? And if they are, it's a pretty low probability event, right? It's only about an 11% probability event of it going above 100 by Friday. All right, so moving on.
Oh, Nick, I've got a few questions on that.
Yeah.
So if we have in the money calls that are expiring in September, how would you play earnings with those?
So if you have September OPEX, if they're in the money, I'd probably just hang on to them, because the IV won't be as affected as the contracts for this Friday or August OPEX, right? So look at the skew. I'll pull it up right now so you can see it. You can see that options are much more expensive, relatively speaking, for August than they are for September or October, right? So you can see right now that the August OPEX much pricier than September or October because everyone is placing bets in the short term, right? So you own September contracts, you said, right? So you won't be as affected by the IB crush because you have so much time left on your contracts. You have, around, I think 55 days or something like that, right? So yeah, I wouldn't be too worried about that. If you want to hedge yourself a little bit and offset your risk of IB crush, you could sell, a couple weeks out of the monies, for example, like the 105 strike, maybe for next Friday. I'm not sure what they're going for right now, but I can see, let me see right now. So if you look at the option chain for next Friday, the 105s are going for what, 50 cents. So that can be a small way of offsetting your risk, but it's not a lot of premium you're pulling in, right? If you wanted to sell the 100 strike, you would, pull in $1 or 10 roughly, but you'd be capping your gains at 100 if it were to shoot up there. And I do think that has a good chance of breaking above all-time highs this week. So that's why I'm kind of cautious about doing a hedge like that. So given that you have more time on your contracts, I wouldn't be too concerned about your position. If you're deep in the money on your call side, what you could do is you could kind of collar your call option if you wanted. You could sell it out of the money call option like a couple weeks out, and then buy an out of the money put option a couple weeks out if you wanted to for like no cost, right? That's what you could do if you wanted. What strike are you holding right now?
87 and a half and 85.
For September OPEX?
Yep.
Okay. September OPEX. So you have 87 and a half, and 85. So you have about 17 or 18K of premium tied up roughly per one contract for each strike. Yeah, what you could do, so the put options for next Friday are at those strikes aren't very expensive. 85 strike is only about 94 cents. So if you wanted to, you could sell, for example, the 100 strike, right? And you could buy the 85 puts to hedge. I just think it's kind of foolish, like if you're betting on going up, you should have a good thesis and strong conviction on it going up, right? And obviously manage your risk. If your position is too big for your portfolio, then maybe cut one of those positions. That might be the better move actually, is cutting one of your contracts. If you only have two contracts, maybe cut the 85, ride the 87.50 or vice versa. Obviously if you cut the 85, you're reducing your risk much more. That might not be a bad idea to do, is cut the 85. And then obviously if it runs the upside, you're happy because you still have the position and you get directional exposure to the upside. You see some nice profit there. If it goes to the downside, you're not as disappointed because you're not losing entirely on two contracts, whereas you'd be losing, on two contracts if it were to pull back down to like 80 or so, right?
Yep, that makes sense. Thank you.
No worries at all. My pleasure, man. So back to the discussion on earnings, right? So this week we have also on Tuesday after hours. So again, AMD reports Tuesday after market close. So keep an eye on that. We also have Apple and Microsoft and Google and Visa and Starbucks as well, all on Tuesday after hours. So I'm just going to blast through those pretty fast, right? So looking at Apple, they're near all-time highs right now. They've rallied pretty strongly the last month or so. I mentioned them, when it was around the 125 range, that it was decent long, but right now, as we've seen numerous times, it's rallied into earnings before, had a phenomenal report, sold off, right? Rallied into earnings before as well over here, sold off again, right? The last report that Apple had, it was at roughly 137 before they reported. Phenomenal quarter, they smashed everything. And what happened? They fell down and they just kind of, puttered around the 125, 130 range for about a month before taking off over the last month or so, right? So again, this is why, regardless of how bullish you are, you have to remember that these kind of moves can be factoring in a strong earning report, right? So we've already seen a move about 21% in the last month or so on Apple. To think that it could run, an additional 10%, 20% without any additional news, like, a large buyback or something like that, or a new product launch, I think is kind of foolish. So, possible we hit 155-ish, maybe like 158, but I think the asymmetry of risk is to the downside here, especially with the market at all-time highs. My thesis is that we're going to see, a bunch of these names like Microsoft, Google, Facebook, etc., pop before ERs and then sell off no matter what happens on the ER, right? So Apple trading over here, 148-ish, possible goes to 155 or so, maybe 158, but I think it's better to wait till after the event, hope for a flat open, and then trade the earning outcome, right? If it's a bullish outcome with price upgrades, trade the bullish side, over the next 2 months or so, right? If it's bearish, trade the bearish side, right? But to go in with it right now when IV is a bit high, again, that's a lot of risk you're taking, right? So looking at the option chain on Apple right here, right? IV is not crazy high relative to HV, 5% and change above historical. So premiums are still a little bit juiced, but not so much. Looking for Friday, the expected move right now is only about $6 in one direction. So upside is around 154-ish, downside is around 142. Not a massive move expected. Again, they're worth a few $1 trillion right now, so it requires a lot of capital to move the stock in a big way. I would probably wait till after the event again on most of these names and play them after, because we've seen repeatedly names like this and Microsoft sell off after a strong report, right? Speaking of Microsoft, I'll pull that up right now as well and show you what I mean by that, right? So we have MSFT over here, and so the past 2 quarters, what have we seen? We've seen this. We saw last quarter rally heavily into ER, sell off, consolidate, rally heavily into ER. Probable now that we sell off and consolidate, because the same pattern happened before, right over here, and before that, right over here. So again, rally into earnings, sell off, consolidate for a bit, rally into earnings, sell off, consolidate for a bit, rally into earnings, sell off, consolidate for a bit. And now we've done the same thing. So I expect a similar move for Microsoft for ER, where no matter what they report, good or bad, doesn't matter, they likely sell off on ER, and they'll probably drop back down, fill that gap around 283 area, 281 area, and possibly hover around the 270 mark for a little bit before popping back into the next quarter and pushing new all-time highs again, right? I'm not saying that it's a bad buy. If you're buying it for a year out, or if you're buying stock, if you're buying leaps, if you're buying half a year out, it doesn't really matter what you're doing right now. But again, you want to watch the implied volatility on the short duration contracts that are a month or less in duration, right? So looking at the option chain for Microsoft as well, we can see that they have an IV of 20%, historical 15% and change, so a little bit high right now. Looking at the expected move for Friday, we have an expected move approximately $10 in one direction, so 300 upside, downside of 280 or so. That makes sense for it to pull back down to 280-ish, even on a good report, putter around there between 280 and 270 for maybe a month or so before pushing back up into the next quarter's report, which will occur at some point in time, I think in late November, right? So keep an eye on this as well. Again, I think the best way to play these earnings is wait till after the event and then play directionally based upon the information you have in hand. If it opens flat or even a little bit up on a very strong report, you can buy some cheap call options for a month out, and you don't have that Vega risk there, right? The IV crush risk, right? So very important to hedge your bets and not only see one side of the coin, right? A lot of people love the idea, and I've been there as well, of making a lot of money in a very short period of time on a binary event. It's exciting, it's a lot of fun, but losing money from your portfolio on a foolish bet is not a lot of fun, and it can take a long time to recoup that money, right? The saddest thing I see a lot is people that make smart moves repeatedly over the course of a few months, only to risk that profit on a binary bet, lose it, and then be back at square one and effectively have wasted 3 or 4 months of their time doing nothing with no results to show for it, when they could have just simply waited for the earning event to pass by, taken a bet, a positional bet after the event with all information in hand, and then if they lose, it isn't that bad because it isn't that binary, right? So keep that in mind, right? You want to always be managing your risk at all times. It's very important to think about not what you can make, but what you can lose, right? So very important, okay? The next name I'm going to talk about right now, guys, is Google and then Visa. So Google, again, here's a chart. I'll pull it up for you guys right now. Also at all-time highs as of Friday, nice big pop up, right? Last quarter, what did they do? They popped up to around 24.52, then sold off after their ER, and then popped up now into new all-time highs, 27.57, right? So again, similar pattern to Apple and Microsoft. Looking at the option chain right now, which is over here, you can see that the expected move. One second, sorry guys, just misclick. So expected move right now for this coming Friday is approximately $110 in one direction. So upside of 28.60, downside of 26.40 or so, right? But again, expensive options. Chain is not very liquid, not a lot of open interest, not a lot of volume, super wide spreads on each contract. I would not trade this at all whatsoever, regardless of if you're bullish or bearish. Wait till after the event. And if you are going to trade this, I would trade monthly OPEX. Again, you need to look at the rounder strikes. Even then, there's pretty wide spreads on each option, right? Each strike price. So I would be careful with this as well, right? Moving on to Visa. The Visa reports as well on Tuesday after hours, which makes it a very busy day. They closed at all-time highs on Friday as well, right? Here's the chart. So they tapped all-time highs almost on Friday, 250-ish, right? They've been doing pretty well overall. The expected move on Visa for this coming Friday is about $8 to the upside or $8 to the downside. Upside 258, downside 242, right? And again, I love trading Visa after the ERs because premiums aren't that high, right? So if they have a good report and they open flat on Wednesday morning, you can trade this with not much risk for Friday OPEX if you want to take, a short-term trade, or you can buy, a few months out if you wanted to take a directional position, and it doesn't cost you too much, right? I've won numerous times on Visa over the years trading after the event itself, and I find it to be a decent setup usually when they beat and stock opens flat, right? So for example, if it opened, up or down like $3 after a solid ER, not a bad idea to buy some calls, maybe 2 months out or so, assuming they had a strong report, right? But yeah, keep an eye on this as well on Tuesday after market close. And next up we have, so when actually there's one more name, which is not a big name, but it's QuantumScape. They report as well on Tuesday morning, right? I mean, Tuesday after close as well. They are a battery maker, or I guess research company right now, and they don't have any current revenue. But here's the chart. You can see, right, they were a SPAC, popped up to 133-ish, fell back down, and they're $22 or so per share, right? So they report on Tuesday as well after hours, and expected move on QuantumScape is right now about 250 in one direction. So upside, about 250 in one direction. So upside will be around 25, downside around 20-ish, right? Not crazy exciting, but again, someone asked about it, so I thought I'd just cover it fast, right? If you are trading it, obviously trade at your own risk. They are pre-revenue right now, and might be a while before they're showing any revenue at all, right? So keep an eye on that too. Next up, we're looking at Boeing, Shopify, McDonald's, and Spotify, right? So Boeing, I won't pull up these charts here, but Boeing has an expected move this coming week of roughly $8 in one direction. So upside 228, downside 212. That's for this coming Friday. IV is not super high overall, but again, it can move big in one direction regardless. On these lower IV, I mean, when IV isn't as high as other tickers are for an ER event, it's possible that you get a surprise where it causes a larger than expected move in one direction, right? So we're talking here a possible move like $20 up or $20 down by Friday, right? That being said, obviously, I would prefer to wait till after the event and wait and see what happens with their earnings before I actually trade, right? Now, looking at the other names I mentioned, so we have Shopify, McDonald's, and Spotify, right? Shopify has been on a tear as well. In my opinion, one of the most overvalued companies in the market, just because they are worth right now. Let me just pull up the data. So currently Shopify is worth $200 billion, and they're doing 3.45 billion in revenues and 1.61 billion in profit, right? So price to sales ratio of 57.49, which is pretty crazy. Forward PE of 330.51, which is insane as well. If you can compare them to Wix, which is a competitor of theirs, right? Wix is worth $17 billion and they have sales of $1 billion, and they're operating at a negative income right now of 247 million, right? Net income, right? So I think Shopify is very overvalued. But that being said, regardless of my sentiment toward Shopify, the expected move for the coming week is approximately in one direction, 110 to the upside or downside. So upside would be around 1770, downside would be around 1540 or so, right? But again, the option chain is super illiquid, not much open interest, not much volume, very wide spreads. Similar to Google here, I wouldn't really trade it. If you are trading it, obviously be cautious because IV crush can be pretty harsh, right? Next name we're looking at is McDonald's. McDonald's, someone asked about this as well, right? So McD's, they're trading near all-time highs. They've been doing pretty well during the pandemic because they've been doing delivery, also with DoorDash and Uber Eats and whatnot. So this coming Friday, they have an expected move of around 650 in one direction from the current price. So upside would be around 249. Downside would be roughly 236 or so, right? Not too exciting again. McDonald's doesn't usually move too much on ERs, so keep an eye on that as well. Next, we have also Spotify, so SPOT, right? They report also on Wednesday morning before market open. IV is very high right now as well. Current expected move on Spotify, roughly $17 in one direction. So upside would be around $259.50 upside. Downside would be around $225 or so, right? So keep an eye on Spotify as well. But again, option chain is not very liquid as well. You can see bid-ask spreads are very wide. Be very cautious with trading these names, right? Wednesday after close, we have three big names as well reporting: Facebook, PayPal, and Qualcomm. So starting off with Facebook, which also hit all-time highs on Friday. Here's the chart, similar setup to Google, Microsoft, etc. All-time highs on Friday based upon Snapchat's solid report. Everyone thinks that social media stocks are a buy. So we saw it pop up over here. In all probability, they have had their pre-earning move to the upside. If they report a solid report, I expect a sell-off again because they've already popped on news of Snapchat having a very good report, right? So looking at the option chain now, you can see that Facebook has an expected move for the coming week of about $22 in one direction. So upside would be around $392. Downside would be around $248 approximately, right? So that would be a gap fill on the move from Friday. Keep in mind they were up about 7% on Friday on Snapchat's news, so it's probably priced in to their earning report, no matter how good it is, right? Next, we have PayPal, who I think has been killing it. They are at all-time highs as well, or near those anyway. Here's a chart. Pulling it up right now. Sorry, misclick again. So PayPal right here. Again, we are at all-time highs on Friday, 308 or so, and had a very strong rally, just like Apple, Microsoft, etc., into ER. So I would also play cautiously because, again, I think that we're going to see a lot of these names do very well in their reports. You know, they're great companies, but they've already priced in a lot of these moves, right? So 308, current expected move on PayPal is around $16 in one direction. So upside would be around 324 upside. Downside would be around 292 or so. I love playing PayPal when they report a strong quarter and they fall after the report because it makes the calls that much cheaper for, you know, a few months out. And, you know, I've seen it happen a few times where it's had a very solid beat on top and bottom. It's fallen about 5%, only to recover by that the Friday expiration, right? So, you know, for example, if it were to fall on a Thursday morning and dip down, it's possible it recovers that by Friday close, right? So again, I think the best way to play these earnings is to wait till after the event itself and then trade the calls or puts depending on directional bias based on the information you have at hand after the IV crush occurs, right? We have now Qualcomm as well, right? And keep in mind, Wednesday we have FOMC too, so going to be a big event. The Qualcomm reports on Wednesday after hours too. And expected move here is about 750 in one direction from the current price. So upside would be around 152.50, downside would be around 137.50 approximately, right? I don't follow them too closely, but they shouldn't have a bearing on SMH ETF for the semiconductors. If you're trading, AMD or Intel, for example, it might have a bearing on those names as well, right? So keep an eye on Qualcomm too. Then moving on to Thursday, we have after hours, Amazon and Pinterest, right? So Pinterest should be very interesting because Snapchat had a very strong quarter and they popped. Pinterest, they're at 77.70 approximately. This current week, the expected move is about $10 in one direction. So upside would be around 87.70, downside would be around 67.70 or so, right? But the IV right now is very, very high, right? About 27% roughly above the historical. So IV crush is going to be pretty severe. Again, I would wait till after the event to trade it. I'm bullish on Pinterest into the event because we've seen Snapchat have a strong quarter as well as Twitter. So in all probability, we're going to see Pinterest follow suit with a very strong quarter with strong guidance too, right? Next up, Amazon, right? Amazon reports Thursday after hours as well. They have an expected move this week of about 150 bucks, sorry, 170 actually in one direction. So the current price, upside would be around 38.20, downside would be around 34.80 or so, right? So very large range of values. Again, option chain not very liquid, very wide spreads depending on the strike you choose. If you choose, obscure strikes, you're gonna get more wide spreads. If you choose, round strikes like 3650, 3700, for example, you're going to get tighter spreads, right? Only about $1 here on 3700, only about actually there's $2 here, so separating these on 3650s, right? So still pretty wide overall, but again, just like Shopify and Google, I wouldn't trade these before an ER event because IV crush can be severe as well. And I said it numerous times already, I'm trying to hammer home the point that you got to manage your risk well by not trading binary events and play the earnings after they occur, because that's the best way to play them. You have all the information in your hand. IV crush has already occurred. It's not binary anymore. You can go directional, bullish or bearish with far less risk, right? So that's my my take on ERs, right? Some boring names to go over for Friday morning reports are ExxonMobil, Chevron, and Caterpillar. So XOM, I was looking at last week actually with a few guys in the group. They have been, puttering around the 55 to 60 region, and we're talking about oil supply shortages globally right now. Possibly push up to 65-ish in the next few months, but right now for the week ahead, the expected move on XOM is only about $2 in one direction, so upside of about 59, downside of about 55. Looking at Chevron, you have an expected move now of about $3 in one direction, so upside of about 102, downside of about 96, right? Nothing crazy. And last but not least, we have Caterpillar, right? They report Friday morning as well, and they have an expected move of about $9 in one direction, so upside would be 219, downside would be 200 or so, right, in the current price. Looking at SPY again, with some ratio put spreads for hedging, right? We hit all-time highs after that nice pullback on Monday. I think we're a little bit frothy here, but the VIX died down. So perhaps we rally for a few more weeks to 445-ish, but I do think that hedging is in order for August expiration or September expiration. And again, I mentioned the put ratio spreads, which are decent for using as hedges because they don't require much capital outlay. They do have downside risk if it does have a larger than expected move to the downside. But for example, let's say you're looking at August 20th expiration on SPY, and you were to go with, for example, the 425 puts, which it went below on Monday last week, long there, and you went short, for example, the 405 puts, right? So you're doing a $20 wide ratio spread, selling two of the 405s and long one of the 425s. Net debit is about 34 cents, right? So your risk is 34 cents. Maximum gain is 20 minus 34 cents, which is $19.66, right? So not too bad overall. Decent hedge down to 405. We do also have a gap on SPY now from the Thursday to Friday move. I will show you guys what I mean in a sec. Here it is, right? So nice little gap right here from 435.46 high on, close on Thursday to a gap up at 436.79 on Friday, right? So there's a gap to be filled between Thursday and Friday. That should occur at some point in the next week or so. So possible we see that gap fill pretty soon, right? Keep an eye on that too. I'm going to stop over here because I'm tired of talking, but if you like the video, obviously just share with whoever you think will benefit. And if you have any questions at all, just comment below and I'll answer them whenever I can. All right. Thanks for watching, and we'll do some Q&A now, guys.